Welcome to the Commercial Property Investing Podcast Australia, where I'm your host, Arjun Paliwal, and joined by Chris Huckster, our head of commercial at InvestorKit Buyers Agency. Today, we've got Dane Crawford from the Commercial Collective based out in Newcastle. There's actually a couple of reasons why Dane was so important to join us for the first episode. One is we give you a deep dive into a city of interest and what's happening out there in the commercial market. Two is we go through key industry types and some numbers behind them as to what's standing out and why. And then three, with Dane's experience of scaling a commercial agency, you get to hear it from someone with high market share in that city who understands it like few others do. So tune in now and looking forward to many more episodes together on the Commercial Property Investing Podcast. Dane Crawford, Commercial Collective. Welcome to the show, my friend.
Thank you, mate. Pleasure to be here.
Well, mate, I want to actually take it back because I know we've got lots of gold to talk today on industrial assets, the Newcastle market. So very excited to dig into that. But I want to take it back more specifically to the Commercial Collective and your background. Could you let us know where it all started and how you got into doing what you're doing today?
Well, I always had a passion for property very, very early on, for as long as I can remember, actually. So my dad used to take me for breakfast on a weekend and used to read the paper. And he used to read the paper and he used to pull out the domain guide or the property guide back then and hand that to me. And I used to just flick through the property guide and over time I just became really good at picking out good deals, and my passion for property really started there. And as I got older, I pursued a career naturally in residential property, which I think, you know, inherently is where most people sort of lean towards when they think of property. So I started in residential, did a number of years there, and then moved over to commercial, and built a career from there, mainly in the large sort of institutional type organisations, and then 6 years ago, a group of us, four of us in total, who worked together within the same organisation. We got to a point where we decided we wanted to go out and have a crack on our own, and that's how Commercial Collective started. So for the four of us 6 years ago, and we've built that business or our business Commercial Collective now to around 50 people.
Yeah, that's special. Now, in terms of the background in Commercial Collective, talk me through some of the deals you were working on when you first were just about to leave what you were doing prior, because obviously that would have given you some confidence to go, we can do this, guys. So what were some of the deals you were working on then, and what were some of the deals you're chewing your teeth into now? Yeah,
I think it was just a perfect moment with the four of us coming together that we really wanted to we were all at the top of our game. We were all really comfortable with what we were doing, and there was nothing broken per se with what we were doing there, but we just felt like we could go another level and really do things better. And so with that, we decided to go out and have a crack on our own, and we wanted to build something that was different to what everyone else was doing, and really be the future of commercial real estate. So we had a big mindset early on, and when we peeled it right back, we really just wanted to get back to what we were in business for, which was serving the client. And we're a service-based business. We really just wanted to put the priorities of the client first. And we knew if we did that and we did a good job at that the business would grow from there. And luckily, it did.
So Dane, you've seen some tremendous scale in terms of what you've been doing in the business there. What are some, examples of where you've actually scaled it and you've had a moment to look back and gone like that was a really, really special deal, or that was a really special experience? I'd love to just pick out one particular deal that, shines to you in terms of the impact you and your team have had to some of the commercial property market owners in Newcastle.
Yeah. Okay. Well, I'd have to have a think about that in terms of just pinpointing a singular deal. What I am excited about and proud of is the real Newcastle story, and that's something that we've been a part of since very early on. Like we've been believers in the Newcastle and Greater Hunter region since we first started, and it's a story that's been really hard to sell, I guess, outside of the region. And especially when you're talking or referring back to the major metro markets. But What I would say has been really exciting has been the growth of Newcastle and the Hunter over the last 5-10 years. I've found a lot of people that we talk to and I talk to that haven't been to Newcastle for say 10 years and then they arrive. It's like a real smack in the face. It's completely changed in terms of the landscape of what it used to be. It's really grown up and become sophisticated and matured as an area, and gone are the days where it's just viewed as that sort of sleepy small mining town. It's really it's a mini major in a sense, and we refer to Newcastle now as fringe CBD, and CBD being Sydney. We're on the fringes now, and we really are a mini Sydney. It's a powerful engine out of Newcastle. So I'm really excited about that. In terms of deals, what I'm really proud about when I think of Commercial Collective has been the growth. We really just started out having no idea what we were doing when we left in terms of starting a business. We were agents. We were high performing agents, but really had no idea what we were doing when it came to starting and running a business.
Yeah.
And when you come out of organisations that you've been a part of for a long period of time, and they're well recognised and well known internationally, and they create a narrative that the reason you are successful is because of them, and that's a story that I genuinely think that they believe. When you go out, it's good to test that, and I think as individuals, it's always nice to be growing and testing yourself, and that was something that I'm really proud of when we did leave. And we were starting something from scratch. It was essentially a startup, going straight up against large institutional entrenched organisations that have been in the market for the best part of 3 decades. To roll the sleeves up and get good traction and growth, I'm super proud of. We're now the most active commercial agency in the Greater Hunter region.
What an achievement there! That's awesome.
And so that's really cool, and we've done it on our own terms as well. And I think in our market, it was something people were waiting for.
Hey Dane, I'm across the Newcastle market quite a bit, and every time I put in an inquiry for a commercial property, whether it be industrial, whether it be a nice like retail, investment.
Yep.
Your team is always the person that I'm inquiring about. Craig, I speak to Ryan, Benjamin on the odd occasion as well. So you've grown an amazing team there. What markets are you seeing particularly growing significantly in Newcastle, and why?
Yeah, so in terms of the broader market, it's just growing as a whole. We've got we've had and still have quite a lot of new development in terms of commercial A-grade office accommodation. There's a lot of government investment, a lot of private investment on the back of that. But in terms of just a pure sector within the commercial market, industrial definitely has been the hot property. It's been the market darling since COVID for the last probably 6 years, and it's continued to perform really, really strongly. Our market is significantly undersupplied when it comes to industrial property, both in terms of built assets and also land. Very, very limited land available in our markets, and it's just a natural supply and demand. Because there is low supply, low availability of stock, and high demand, that's really underpinned the growth of both land and also investment sales as well.
So diversity in industry. So a lot of government funding.
Yep.
Businesses are doing really well. Land is restricted. Land values are really high.
Yeah.
Building cost is high.
Yeah.
So we purchased a building in Newcastle for I think 1,500 a square meter, but I think it costs 2,200 a square meter to build.
Yeah.
with vacancy rates in areas like Tomago as low as around 1.5%, Mayfield West 2.5%. Demand is clearly outpacing supply. And
I mean, you clearly know our market. Like if you just ask me for a number on a whole, our vacancy in industrial is about 2%.
Right.
Yeah. So you look at all the prime grade industrial precincts, and they move a little bit, from 3% to 2.5% to 1.5% to no vacancy. But on a whole, we're about sub 2% when it comes to.
That's very tight in that industry.
It's very, very tight. So for owners, it means there's very, very low incentives. There's high demand. You've got good prospect of a replacement of tenant, and you spoke about the deal that you did, and that's just getting into the detail of where the opportunities are, and I could talk about that. But yeah, certainly opportunities around buying existing buildings which you're acquiring below replacement cost. So
and that's a big part to the supply issue.
Absolutely.
So like what you're talking about there is like, that's been a big problem in the residential market for many years, and industrial in particular, Newcastle, like you're pointing out, that's a huge issue. Because if you're talking a spread of 1,500 up to 2,500 on the dollar per squares, all of a sudden that's giving that buyer the focus on the established.
Yeah.
So established investors, established sellers are loving you because they're like, hey, you've got buyer competition coming in, and you're able to control that price movement too. But then the second part is it's not incentivizing the new guys to come and build as much as they should, because they're like bringing a much pricier property proposition to the table, right?
Yeah, spot on. And so that's where the conversation around, a market rent to an economic rent comes into play. But like from your perspective, acting on, being retained on the buyer side, and us as agents, we work on the owner side. So, we're sort of on different sides of the field, playing. But when you're talking to your clients, like it's really just understanding what is their mandate. Like if it's from an investment perspective, then, if you're buying an industrial shed that's got a tenant in it, then that's fine. If they've got a low lease tenure, the lease tail's coming up to expiry, typically when you're looking from a pure investment perspective, you would not consider that.
Yeah.
If you're working with a client, you say you want a longer term lease, for security and keep it more passive and things like that. So, but where the market is at the moment, that's I don't see that as a risky or a heightened risk in investment perspective. I see that as a value add type opportunity. So it's really just understanding what your client's requirement is, what their investment mandate is, and if they're looking for a value add, then you'd be able to put, picking the right type of asset and area. You could buy an existing shed that's got a tenant with a 1 or 2 year lease in place, knowing that if they're coming up for a renewal, then you're going to get good rent increase. Or if they do vacate, the prospect of a new tenant coming in with a really low letting up period and minimal to no incentive is a really good prospect.
Loving the show and keen to invest? Well, book your free discovery call and we'll actually walk you through how to build a high growth portfolio without all the guesswork. Just jump onto the link in the show notes or visit investorkit.com.au to book your discovery call. And now let's get back into the show. Yeah, that's a great point on risk profile. Me and Chris talk about that often. It's like, we move up the scale of lease time remaining.
Yes.
You move down the scale of net yield you can actually chase as a buyer.
Yes, spot on.
Just because I think like the seller will have greater leverage in that conversation, because it's like, hey, we're giving you as good as it gets, 5 years, 4 years, 6 years. And so as a buyer, if your risk profile can handle it, when you start to get on the ground and you see these statistics of such a buoyant Newcastle market, a tight market when it comes to vacancy, your risk is not the same. You can't compare it apples to other markets, because if their industrial rates are tracking at 4-6% plus, all of a sudden you're here at 2 and sub 2.
Yeah.
Like it's not the same game of talking a 2 year lease here versus a 2 year lease in another market. A 2 year lease here is still quite valuable, but you're not having that same net yield payment as a buyer as say a 5 year lease remaining. So I like that call out from you on that part.
Yeah. And I think it's probably just having confidence in, like I said before about, we've been real believers in that Newcastle and Hunter story, because we're in the trenches, we're on the front line, we see it, we feel it, we're there every day, so we know it and have the belief in it, and we've seen it over the last 5 to 10 years. But from an outside perspective, having that same belief and trust or understanding of what that Newcastle story is something that I think the smart money is on, and we're seeing more and more of it come in. Just touching on just the resilience and underlying fundamentals or foundational blocks that you really look for when it comes to investment. Newcastle and the Hunter has all of that. And it just represents such great value for money and bang for buck. I hear a lot when we're talking to people outside of Newcastle go, oh, it should be cheaper than that. Well,
not anymore.
And that to me goes, well, that's an issue, because that's their belief. Like they think that Newcastle is just this small town that should be cheap. And for me, cheap represents, you're getting something not of quality. That's cheap. Where, if you're getting something value for money, it might not be cheap. You might be paying a good price for it. But if you're getting value for money and bang for buck, that's what Newcastle represents.
Yeah.
So your money's going further.
Yeah.
And it's giving you more. But Newcastle isn't cheap. It's not like you're going to come in and cheap is poor product, high risk. That's not Newcastle. Newcastle's good product, good underlying investment fundamentals, and low risk. So that's what we are. And in the Hunter as a whole, or Newcastle, we're the second largest city in New South Wales outside of Sydney.
People forget that often.
That's right.
Like people forget that. It's like, it's fringe Sydney. I think that itself is we're one.
So I've got you saying that already.
Yeah,
there you go.
We're one train line away, or a speedy train line away from being Sydney.
Yep.
We'll just call you the Burb soon. From
Please do. We're fringe CBD of Sydney. That's how we see it.
Absolutely.
So it just takes 2 hours to get there.
Yeah, absolutely. But the whole, Chris, from your side as well, like we find it fascinating when we see people just not realizing that it's that large of an economic center.
Yeah.
And Chris, you talk to so many clients. I'll let you share more about this. But like, when you explain that diversity story, how different is it today than it was maybe 6 to 10 years ago, looking at all the data you see?
Oh, 100%. So I looked at a report the other day, Heron Todd White, and they explained that Newcastle's had this exponential growth for the last 4 years. However, they're pinpointing industrial to be at the bottom of the growth cycle. So it's got massive growth up and coming. So, and why is that? It's how Dane explained before. All this government investing, all this government spending, diversity in industry. It's not a mining town anymore, like you said.
Yeah.
So I would say those are the key differences. And I'm definitely seeing a lot of growth happening there, especially with that tight supply.
Yeah. I was just going to say, and like when you look at the growth in the sectors, like who's going into these sheds, and
I'm interested to know that. Like who are the people coming in, the profile from a rent or purchase inquiry that you're getting?
Well, you look at where we are located. Like we're at the end of the M1. So if you look at, say, you've got Sydney, you've got Western Sydney.
Yeah.
You've got a lot of industrial sort of precincts out around that way, and you look at the rents that they're paying there and the type of users there. If they go down the M1, you've still got great connectivity there, but the rents are half, the land rates are half, and you're losing nothing in terms of the infrastructure piece. Then that's that whole economic conversation is far superior to go to Newcastle. So that's where we're seeing where we're located geographically. It's really strong, and those logistics or final mile type services, warehousing sectors like that have really taken off within the Newcastle area. So they've been the sort of key drivers within that industrial patch.
Yeah. Well, my last point before I hand over to you, Chris, is that what you're interestingly explaining is like the economic growth of Newcastle that's also bringing on all that activity in industrial, right? Industrial is one of those assets that's alongside like, offices or retail to an extent, but that like localized spending, it actually just flows through immediately through that asset class. And people forget, like when you're on residential, you want less supply of residential houses. But when you're in the commercial, especially assets like industrial, more supply of residential houses actually means more people movement. More people taking up shop or taking up areas in a city that's growing also means more dollars to flow. And then more industrial around them needs to be servicing the new people coming in. So we actually, like in other markets in the residential view, hate the new supply. But when we look at commercial and we see this new supply of residential coming to the area, that's a growth area and that's actually advantageous to some of the commercial around it. So I really like that pickup of, what you're noticing on the sides of the M1 and then also just the types of people flowing through there. But just wanted to make that point.
Population growth. It's critically important. And when you look at Newcastle and the Hunter, we've got really, really strong population growth. So, and then when it's undersupplied by, when it's also underpinned and supplied by how diverse that economy is, then it makes for a really, really strong investment proposition.
That's amazing, Dane. What types of buyers are you seeing active in the market right now? Are they owner-occupiers fighting for space? Is it investors? What are you saying? Are you seeing investors actually taking the leap and buying assets with a 1-year lease remaining? Potentially doing an uplift play. What are you seeing at the moment?
Bit of everything. What I'd say on a whole, inquiry has increased this year dramatically. So we've seen about a 40% increase in inquiry just this year, and then we've seen another uptick just on the back of the rate decrease. Sorry, I'm used to saying rise.
It's been haunting us for 3 years, right? 3 years of haunting us on that. Now it's finally the other way.
It's always funny because there's been so much talk of this rate decrease coming because there's been so much pain, cost of living and all the rest of it. And I think everyone, reasonably expected it to happen when it did, but still people sit on their hands and they don't do anything until it actually materializes. And so we've seen a big uptick in inquiry on the back of that. All the data that we're getting is that there's going to be another at least 2 rate cuts this year, potentially 3. So we're really going to see the market take off again. So anyone that's looking now, I think they're gonna be in front, definitely, if they make a call within the next sort of 6 to 12 months.
And from your vendors' front, are they holding on their stock because they're anticipating rates dropping and they think they could probably get a better price for it?
Yeah.
Are you seeing that as well?
Look, the thing about commercial is that they typically can absorb more on the way up and can absorb more on the way down as well. When I talk about when the market sort of fluctuates up and down, because we're a cyclical type industry, that goes in cycles up and down. Thankfully, Newcastle, like we don't have these big peaks and troughs. Like we don't get big bangs and busts. We're very, calculated in how we grow, which is nice when you're making decisions. But our vendors rarely are forced to make a call on whether they have to sell or what have you. So it's normally a requirement that they make that decision based on life. So whether they're older and they want to realise some of the equity that they've created over a long period of time, whether it's a business owner that they've outgrown their space or they want to retract into a smaller space, then they're making a call to either lease it out or to sell it. So it's normally a real requirement for them to make the decision, not so much that they have to make it, if that makes sense.
It does.
Yeah. In terms of you spoke about profiles before. like investment and buyers and or owner occupiers and things like that. To give a real life case study, we recently took to market a property on Derby Street, Cooks Hill. It had a 10-year lease in place, so it was a long-term lease.
Juicy.
Yeah.
Up our alley.
Yeah. And it was a lease to a mechanic that's got a good profile in the market. They've got a number of shops and well known. That generated a huge amount of inquiry because of the length of lease.
I inquired on it.
Did you?
I know the exact one you're talking about.
Okay. All right. Well, okay, that's interesting because the inquiry there was 70% out of area. Almost wholly from Sydney. Yeah, 30% local inquiry. That was, so we'd put you in the Sydney-based inquiry.
Put me in that bucket.
So it was Sydney 70-30, Sydney to Newcastle based inquiry, and it sold. We took it to auction. It sold under the hammer to a Sydney-based investor who's looking to hold it for the long term. Sold on a 4.9%.
Wow!
Net
Touching
return.
the fours now.
Yeah. So
well done to your team.
Yeah. So,
absolutely.
Yeah, so it was a really great outcome.
Absolutely.
Good result. The buyer's stoked because he's got a long-term asset. But it also just goes to show that 4.9%. You're not. We still get buyers ring us up looking for 8%. We want 8%. I don't know.
Well, you know what the 4.9 brings to attention now? It's now Newcastle being a transitioning market from people going, I go there to get high yields, to I go there for stability.
That's right.
Because a lower yield with a high lease length and then a solid tenancy base like that, and Sydney money calling you to go, I want to park stable assets there at 4.9, that's stability. It's screaming stability to me. Even participating at auction now more is happening as well. Yeah. Right. Your team must be doing a lot more of that as a result because of that confidence or that desire in Newcastle. But I will change one thing. We're going to have to change that analytics from 70-30 Sydney-Newcastle just to make it Sydney from now on. Hey, we just make the analytics. This is just Sydney analytics now because we're one now.
That's
we're
right.
One. This is
we are.
if you see my trick from work to home some days, it's basically a Newcastle trick.
I was thinking that, because like when I come to Sydney, I'm always happy to come to Sydney. It's like it's only 2 hours, right? And then when I talk to clients or industry colleagues, like come to Newcastle. That's 2 hours away. So it take you 2 hours to get from the city to Bondi on a weekend.
Absolutely.
On a Friday afternoon.
Absolutely.
It's not that far. So, but the government's invested. I think it's $500 million in exploring the high-speed rail now to close that link between Newcastle and.
Fingers crossed one day.
There's been a lot of talk about it, but like go from a 3-hour train ride down to I think 45 minutes. So
that'd be unreal.
That would be a huge game changer. Yeah, we've got the international terminal that's due to open to Newcastle Airport in 3 months. We've got a huge upgrade for the John Hunter Hospital. So that's about, I think it's about 850 or close to $900 million investment there. So there's a heap of infrastructure spend that's going into Newcastle, and it's all the stuff that we know. But outside of if you haven't got the lens on Newcastle and the Hunter, you just wouldn't know how good it is.
Yeah.
Dane, you're familiar with working with buyers agents. What are the differences you're seeing working with us compared to someone that would just do it themselves?
Yeah. Well, when I first started in the industry, I think buyers agents were just coming in, and it's like I was always like, why would anyone use a buyers agent? There's always a hard sell and proposition. Like, well, why would you? You can just go and do it yourself. That was when I was in res, but that whole mindset is fundamentally it's flawed because it's not correct. But certainly the rates of us dealing with buyers agents now, as opposed to a DIY, has significantly increased, even just in the last couple of years. I think I always liken business to sport. I come from a sporting background, so I really like just sporting analogies. So if I think of someone retaining a buyer's agent or doing it himself. It's really about, well, if you're running on the footy field and it's your debut, it's your first game, where you've the nerves, you don't really know what you're doing, you're fumbling the ball. Like it's completely different to sending a 300 gamer onto the field that's your halfback, that knows how to make the calls under pressure, knows how to steer the team around, finds the gaps, can really come in and deliver the points right at the finish line to win the game. That's what I see as like a buyer's agent's role on behalf of your client, where you're really providing those industry insights and expertise to steer them and point them in the right direction. It's a really easy working relationship when you're dealing with buyer's agents on an agency side of things. Buyer's agents fundamentally are engaged or retained by the buyer. They're acting on their best interests on their behalf. And us as agents, we're retained by the owner, the vendor. So we have to act on in their best interests. So although we deal with a lot of buyers, fundamentally we're working on the owner's best interests. So when you're dealing with someone that's represented on the other side, then really it's an even playing field in some respects. It's also what we find is that when you're dealing with a buyer's agent, it makes the journey to acquisition a lot more seamless as well. It's really open and transparent. It's respectful, but the buyer's agent has a really good understanding of what their client's investment mandate is or acquisition mandate is. So when we're dealing with a buyer's agent, it makes the whole dynamic a lot easier because we can then put forward properties that meet the requirements. It's just a lot more seamless. Also, through part of that process, when you're going through due diligence and things like that, which you guys do on behalf of your client, if there is a hiccup there, then it's dealt with like really professionally. And I made the reference around the 300 gamer and just having the understanding and knowledge of how to navigate through those scenarios, because not every item that raises itself through due diligence should be a deal breaker. So they're the opportunities when dealing with buyer's agents to be able to work through. And I think if you've got a good buyer's agent that has a good, strong track record that knows what they're doing, then they can really help accelerate your wealth.
Awesome. Well, mate, it's been an amazing session just to unpack more of the growth you're seeing at Commercial Collective. Really go into Newcastle. And I think this is the cool thing about just showcasing different cities that people aren't as deeply aware of, and really understanding the depths of the industrial market, the different lease or buying considerations people make. Mate, thank you so much for joining us and looking forward to more collaboration as we have done in the Newcastle market to just continue doing the best we can for each of our respective clients we support.
Thank you. Thanks for having me. I was really excited. I just really want to shine the lens on Newcastle. So
awesome. Thank you so much.
Awesome, Dane. Thank you, mate.